Hey, it's Ed here. Today we're taking a look at technical analysis for SP500 with Elliott Wave Theory. Before getting into the counts, let's take a look at the CPI numbers that we've had previously and how they have had an effect on the charts. So these have been the numbers that we've had. Again, you can see that some of them did not fit the bottom areas, but again were very close before a pivot, like here on July and here on August. Before that pivot, some of them again hit the time slot very nicely and actually gave us a complete pivot on multiple times, as you can see here. But again, they are very volatile. Pumps and dumps, very much popular scam weeks going on, and yeah, definitely be careful if you're willing to trade or trying to trade the CPI numbers, because sometimes the numbers might be good and we just do a fake pump and then a straight dump afterwards, and vice versa, of course. The reason why I mentioned this is because tomorrow is going to be Wednesday and tomorrow is going to be the CPI numbers data coming out. So again, that is going to be offering a lot of volatility and a lot of, well, volume into the markets, I guess. So let's take a look at how this can be seen on the potential count that we have here, which is the bull count, in which again, well, bull count since it was more bullish than the bear count previously, but bear counts got invalidated. So this is the only count that we're tracking now, where we have this as an ABC coming down, then an expanding diagonal into wave A, then wave B in 3 waves, and then again 1, 2, 3, 4, and 5. My preference here is that we are going to be getting this sideways structure where wave 4 is potentially now down, looking for 5 waves up in here, up into the tomorrow CPI numbers, and then we would be doing this. That would be my preference here. We don't need to be trading the CPI. There is definitely a chance that you can definitely wait for the CPI numbers to come in, do its thing, whatever it's going to do, and then jump in on a preference afterwards that volatility is done, and then ride that move downwards. That is my preference, as I've seen so many of these CPIs now lately doing that scam pump and dump scheme going on, but it's all up to you how you want to be trading it. Now again, there is a chance that this here is the top of fifth. On Russell, for example, we had this as a very decent looking 5 waves coming down. On S&P, not so much. We could be definitely labeling this into some kind of diagonal, and then we would have this as some kind of 3-way structure, having this already as a wave 1 or wave A to the downside, already pre-CPI. My preference at the moment is that we would be taking out these highs, getting towards the 1-to-1 extension around 41.88. And at that point again, we would be getting some kind of divergence from the thirds against the fifths on price and RSI to show a lack of momentum, and then we would be coming down after CPI. At this moment, again, this wave 4, I've labeled it in here. There is a chance, again, as mentioned, that wave 3 would be at these highs and wave 5 would be at these tops. Wave 4 would have to be somewhere in here, and comparing this wave 4 to wave 2, you can see that wave 4 is so much smaller. Not really a fan of that, but again, there is a chance for that to be the case. I kind of like this bit longer wave 4 overall. We have some kind of alteration where this wave 2 has taken out the origin of wave of the origin of its wave. So again, we have a expanding structure something like that here, where in wave 4 we have something like this, pretty simple way. We don't take out the origin price. With the end, we do take or get to the 0.618 and do get to the most common extension targets of or retracement targets, sorry, the 0.382, which is again retracement of this third wave. And now we'd be looking for these extension targets here somewhere, and we'll be looking for if this comes in 5 waves and looking for those divergences, and then looking for downwards again at the CPI. I think that is the best analysis or best case scenario at the moment for me. If we start to take out these lows here, then it is more likely that we have already completed this we have already completed this as a 5-way structure, and this is coming down in either 3 or a 5-way like this. At this point again we would be continuing the higher time frame previous trend, which is again kind of scary if this indeed is a 5-way move. It is, in my opinion, most likely going to be the start of something, not the end of something. So there is always a chance that you might want to be looking at these as a potential trade setups already in here, based on the again same scenario where this would be a wave 1, 2, and then to the downside. If we want to be getting into that trade, we might be wanting to look at this very local structure in here, get into the or let it do its thing, get to the 1.618, 4th, 5th, and then looking for that retracement before downwards. Again, the main idea here is that we might get a 5-way structure or something that looks like 5 and still takes to the upside, as these are again very small time frames, and S&P is very much not known for good Elliott wave structures on these smaller time frames. So again, that would be something to keep in mind. Again, if you're willing to look for the short setup, you would be going short against these highs to minimize your risk, and then opportunities later on if that shows itself. But yeah, I think those are the options that I currently have, and if we get that setup here, I would be taking that short as well. But yeah, I think that's going to do it for this video. If you're interested in more education, check out these advertisements next. But for now, thanks for watching and see you on the next video. Bye bye. A couple of advertisements here: Patreon Elliott Wave Basics course, weekly live streams and more Elliott Wave Analysis. Udemy Elliott Wave Advanced course, including RSI, risk management, Elliott Wave strategies and time analysis, and candle trend capital, trade setups, education and community. Check us out if you're interested in learning more.